Well, we start off with the most important decision that was supposed to take place this week, with the Federal Reserve hiking rates by 75 basis points. And this was a long expected line, especially since that inflation print on Friday of last week, where the US clocked an inflation of around 8.6% year on year for the month of May. Also, the Fed suggested, or rather has tweaked its commentary a little bit, and said that it is committed to bring down inflation to 2%. All this time, such strong language was not being used. Now they've said that they are going to be committed to doing that. The other major shift is GDP growth projections have been brought down to 1.7%. At the end of last year, it was at 4%. It was brought down to 2.8 early this year by around March, and now it's at 1.7%. So that growth number coming down, inflation is red hot, and the third metric, which is rates, are on their way higher. When we're looking at how US indices did, though, they did quite well in trade. There's a good rebound at play at the moment, so global cues currently look positive. The Dow gained around 1%, the S&P 500 up almost 1.5%, and the Nasdaq gained 2.5% in trade yesterday, with markets signaling that they are happy that the Fed is now shifting its attention towards inflation and moving those rates higher. Also signaling the fact that the market had already built in a 75 basis point rate hike. Moving quickly to how European markets did. Now, European markets closed, even prior to the Fed announcement. So maybe loses its meaning and importance a little bit, but European markets closed higher nonetheless. In fact, when I'm looking at the DAX as well as the Stock 600, both were up over 1.3% in trade yesterday. Moving quickly on to how Asia is looking in early trade today, the Nikkei is up 1.5%. Of course, the positive handover has helped the Nikkei gain. The Kospi also up around 1.3%, and the ASX 200 also up around 1/3% in trade. The Shanghai and the Hang Seng, though, are languishing slightly lower. The Shanghai flat down around 10 bips, and the Hang Seng down around 0.5% as we speak. The SGX Nifty in itself is up around 100 points or so, around 0.6% higher in early trade today. Moving quickly on to commodities, well, oil prices came off, especially given the fact that the US growth projections have been revised downward. That means that oil, a little bit of demand pressure is off oil, and oil has hence come off, and it's currently around that $116 a barrel mark. Moving quickly on to gold. Well, gold comes back into focus as the Fed hikes its rates, shifts its focus back on inflation. So gold has gone slightly higher after that low it made yesterday below 1,820. Now it's about at around $1,835 an ounce. And of course, the attention shifts to bond yields. Bond yields, the 10-year US bond yield holds out at 3.36%, clearly signaling the fact that that 75 basis point rate hike was well built in at the moment. And lastly, moving on to crypto. Crypto was completely beaten down from that 30,000 level to around 21,000. It's come back up slightly. Bitcoin at around $22,000 as we speak. So largely, the risk of trade is coming off. Global cues currently shifting to positive, and we also have the SGX Nifty in the green as early indicators.